Let's talk about negotiable instrument of deposit, NIDs, a key player in the money market. NIDs are short-term instruments issued by banks or financial institutions to meet liquidity needs. Unlike fixed certificates of deposit, NIDs are negotiable, meaning they can be traded in the secondary market before maturity. These features offers greater liquidity and flexibility, making NIDs a preferred choice for institutional investors like corporations and banks. With tenures of up to 1 year, NIDs provide attractive yields based on market trends. They also enhance market efficiency and liquidity, allowing banks to access short-term funds quickly to manage reserve, fund loans, or cover expenses. And for investors, NIDs are low-risk, marketable option backed by the issuing institution, though creditworthiness matters. Additionally, NIDs help central banks implement monetary policies, as changes in interest rates directly influence their yields. In summary, NIDs are vital for the financial system, supporting liquidity, stability, and efficiency while offering investors a secure and flexible investment product.
Hello everyone, today I'll be discussing the money market, a critical part of the financial system and its role in facilitating short-term fund exchange. I'll also focus on negotiable instrument of deposit or NIDs, which are key tools within this market. Number 1. Overview of the money market. The money market serves as a platform for the exchange of short-term funds, helping corporations, governments and financial institutions meet their immediate financial needs. It operates with three main characteristics, which is high liquidity, funds are easily accessible, low risk, investments are generally secure, and short-term instruments maturities typically range from a few days to 1 year. This market is essential for maintaining financial stability, ensuring that surplus funds flow to those who need them the most, and fostering efficiency across the broader financial system. Number 2, Introduction to NIDs, Negotiable Instrument of Deposit. Now, let's focus on NIDs, a vital financial tool within the money market. NIDs are fixed-term deposits issued by banks or financial institutions to raise short-term capital. What sets them apart? Unlike traditional savings accounts, NIDs are negotiable and transferable. However, they are primarily aimed at institutional investors such as bank or corporation because of their larger denomination and specific terms. Number 3. How NIDs work in the money market. Let's break down how NIDs function step by step. Step 1. Issuance. NIDs are issued at a discount to their face value with maturity periods ranging from 30 days to 1 year. They offer a predetermined return, making them attractive to investors seeking low-risk options. Step 2. Market players. Key participants include bank corporations, institutional investors, and sometimes high-net-worth individuals. Issuers and investors engage in this transaction based on their liquidity and funding needs. Step 3. Liquidity management. For issuers, NIDs provide an efficient way to manage short-term funding needs without committing to long-term loans. For investors, NIDs offer secure, predictable return on investment. Step 4. Maturity and redemption. Upon maturity, the issuer redeems the NID at its full face value. This allows investors to recover their initial investment along with the agreed-upon return. Number 4. Importance of NIDs in the money market. By facilitating short-term capital exchange, NID ensure the smooth functioning of the money market. For issuers, NIDs enhance liquidity and provide quick access to funding. For investors, they offer secure and predictable investment opportunities. Ultimately, NIDs promote trust and stability among participants, enforcing their role as a vital component of the financial system. In summary, the money market is a cornerstone of financial stability, and tools like NIDs play an essential role in its operation. By supporting liquidity and offering low-risk investment options, NIDs benefit both issuer and investors, ensuring the continued efficiency and stability of the financial system. Thank you.
Thank you, Fasha. Today, I will be presenting an overview of the market players involved in negotiable instrument of deposit, or NIDs. NIDs are crucial instruments in the money market, and their efficient functioning relies on the interaction of several key participants. First, let's start with the primary issuers. Bank issue NIDs as a way to raise short-term funds and manage liquidity. These instruments are sold at a discount to their face value, allowing banks to avoid interest payment while attracting investors. Banks also determine the pricing and maturity of NIDs to ensure they remain competitive and appealing to buyers. Next, we have the institutional investor, such as insurance companies, pension funds, and mutual funds. These entities are the largest buyer of NIDs, as they offer low risk, predictable return, and diversification of opportunities for their portfolio. Similarly, corporations also invest in NIDs to park surplus cash securely, while enjoying the flexibility to liquidate this investment if needed. Another vital group of participants is the secondary market players. Brokers and dealers facilitate the trading of NIDs before maturity, ensuring liquidity and continuous price discovery based on market demand and supply. This makes NIDs an attractive option for short-term investors who need flexibility. Finally, we have the central bank, which play a regulatory role. They ensure transparency in the issuance and trading of NIDs, prevent market manipulations, and foster investor confidence. Central bank also influence the NIDs market indirectly through monetary policies, such as interest rate adjustment. In summary, the ecosystem of NIDs consists of banks, institutional investors, corporations, secondary market participants, and central banks. Together, they ensure the smooth functioning of the important segment of the money market, maintaining liquidity and financial stability. For further information, I will pass to Shabiha.
Negotiable instruments of deposit are financial products known for their liquidity and flexibility. Their key feature is tradability in the secondary market, allowing investors to sell them before maturity if there is a willing buyer. This makes them more accessible compared to fixed deposit, which typically lock funds until maturity. NIDs also provide assurance with a set maturity period ranging from a few months to several years, appealing to risk-averse investors like businesses and institutions that value consistent, predictable return. They offer a fixed interest rate determined in advance, ensuring reliable and steady profits for investors. However, NIDs are unsecured, meaning that they rely on the issuer's financial stability rather than being backed by the assets. The issuer's reputation and ability to meet financial obligations, including paying the principal and interest, are critical for the security of the investment. Lastly, NIDs may be issued at face value or at discount, allowing investors to gain higher returns by redeeming them at full value upon maturity. These features make NIDs a flexible and appealing option for investors.
Now, let's talk about benefit of negotiable instrument of deposit. NIDs are valuable investment option due to their flexibility, security, and profitability. One major benefit is their liquidity, as NIDs can be sold in active secondary market before maturity, allowing investors to access their fund if needed. They also offer a range of tenures from 1 month to 10 years, making them suitable for both short-term financial needs and long-term planning. For example, an individual saving for a short-term goal could choose a 1-month NIDs, while businesses or investors seeking stable long-term growth might prefer a long tenure. Another key advantage is the competitive interest rate that NIDs provide, often higher than regular saving account, with better rates available for larger deposits. Additionally, NIDs may come with tax advantages, such as reduced or zero withholding tax for certain investors, which enhance overall return. In summary, NIDs offer flexibility, high return, and tax benefit, making them a practical choice
for individuals and businesses looking to grow their capital efficiently.
Now, let's talk about the benefits of issuing the instrument. Negotiable instrument of deposit play a significant role in the Malaysian banking sector as a flexible and cost-effective funding instrument. NIDs provide Malaysian banks with access to stable financing, enable them to secure medium to long-term funding. This is particularly important in a dynamic financial landscape like Malaysia, where banks must remain competitive while supporting the economy. Additionally, NIDs offer a lower cost of funds than traditional loans or bonds, as they often come with competitive interest rates that reduce the overall cost of raising capital. This made them an attractive option for Malaysian banks seeking to optimize their funding structure. From an investor perspective, NIDs are highly appealing because they are negotiable and tradable on secondary markets, which ensure liquidity and flexibility. This characteristic aligns with Malaysia's efforts to deepen its financial markets and broaden the investor base, as it provides investors with a reliable and liquid investment option. Furthermore, the issuance of NIDs strengthens the financial position of Malaysian banks by improved asset liability management. By aligning funding structures with asset maturity profile, NIDs reduce mismatches and enhance financial stability. The use of NIDs also support Bank Negara Malaysia objective of promote a stable and resilient financial system that can withstand market fluctuation and economic shocks.
So in conclusion, negotiable instrument of deposit needs are essential to the money market, helping financial institutions raise short-term capital while providing investors with a secure and flexible investment. Needs are vital for liquidity management, reducing borrowing costs, and maintaining financial stability. Beyond individual transactions, they promote efficiency and trust in financial markets, ensuring funds are allocated where needed most. In today's fast-evolving economy, needs remain critical for addressing short-term financial needs while supporting long-term goals. They are more than instruments. They are tools for resilience, growth, and innovation in the global financial system. And that's all from us. Thank you.